Don Luskin, let me just get a quick take on this. McCain wins big. Obama in the back seat for the moment. Mr. Welch was giving us a riff. He doesn't like the Democrats' policies on trade or taxes or businesses. Has that been a factor in this weak market year to date?
Probably it's boiling away in the background. It's not a good thing. I think that it's pretty clear that just the whole credit crisis and the possible impending recession has been what the market's really been thinking about. But, you know, going along in the background, just every day you hear these increasingly radicalized programs where every day it's Hillary Clinton and Barack Obama playing, can you top this? Who can be the bigger protectionist? Who can throw more bones to unions and unemployed people? It's pretty scary. But, Larry, the great news is, I'm sure you saw McCain last night. It's starting to come together. He's starting to make the right kind of courageous statements about free trade, about low taxes, about growth, about self-reliance. It's just turning into a very Reagan-esque message. So whatever happens in November, the voters are going to have a clear choice. John McCain is doing a great job.
Dougie, give me a quick primer on AMBAC, and then I got to get to commodities because I still think that's the headline story today. But
Sure.
You don't like the
Sure.
AMBAC deal, as I understand it. You don't like it. Is that right?
No, may the farce be with you. I think what the AMBAC deal is doing is basically perpetuating the farce of its AAA rating. I mean, I compared recently in an email to you the financial condition of Pfizer, which was downgraded from AAA to AA by Moody's and S&P in December of 2007. And there's no comparison. It's amazing that it took 3 weeks for them to raise half of what they said they would raise, and with minimal participation by the banks, who are the most exposed.
Luskin, do you agree with Dougie Cass about shorting AMBAC? Do you think AMBAC is an important story, or do you think certain networks are obsessing about it?
Well, it's probably, yeah, hell, certain networks are definitely obsessing about that and about a dozen other things that aren't worth it. But, you know, I do disagree with Doug on one fundamental thing. I don't think this continues the farce about the AAA rating. In fact, I think that's what went wrong today. That as soon as they came out with their plan, the ratings agencies were on the tape 30 seconds later saying, it's not good enough. We can't guarantee that you're going to hold your ratings. That's what everybody wants. Look, let's face it. They need to hold their ratings so that the stuff that they've insured doesn't get downgraded when AMBAC gets downgraded. That's what this whole thing is about. That's the only reason anybody cares about this. But look, let's not be too flippant about saying, well, they're too financially weak to raise any money. They raised half of what they were supposed to raise and all that jazz. They are very conflicted as a company. Their existing shareholders would probably be better off if they didn't raise any money at all. If they just gradually and gracefully went out of business and just ran off the existing business. Right now, they're accepting a tremendous amount of dilution, basically so that third parties, not shareholders, third parties, clients, communities, regulators, can keep their dignity by keeping these securities they own from being devalued when the ratings get lowered. So there's a real agency problem here.
Go ahead, Doug.
Don, they basically said that they basically said that they were going to exercise a moratorium for at least 6 months, you know, on any of the toxic stuff. So they're basically saying they're going to let the business run off.
So what does that mean?
Well, wait a second. Just saying you're going to take a time out for 6 months isn't saying you're going to go into runoff mode. Because if you're going to go into runoff mode, what you want to do is you want to maximize what the existing shareholders hope to get in that mode. You don't want to dilute them by a factor of, you know, about 100%. We're talking about $1 billion company that's raising $1 billion to $1.5 billion, so that's greater than 100% dilution.
Correct.
Why do you want to do that?
You're correct.
All right, let's move on.
Think about this. The Street Tracks Gold ETF has more gold in it than many central banks have. If the central banks start buying gold, you can see that price climb overnight. The bottom line is a lot of these commodities are still undervalued. Even though they're on record highs, they've been underpriced for years. So there is a lot of upside potential there.
Hey, and you know what? Gold just had a 10% rally after the IMF said it was going to sell gold.
That's right.
How do I like that?
No, I know it's an fascinating. Luskin, you've been an advocate of buying the commodity stocks. You've been a critic of the Fed for its neglect of the dollar, critic of the Treasury. Is there any evidence at any moment, anything you've heard in recent days or weeks that would change the view? Is there any? I saw a story today that the Europeans would actually defend the dollar, maybe before the Treasury, because the Europeans don't like it, that we may be pricing their exports out of the market. But not a single word, Don. We had the Undersecretary on for International Affairs. He wouldn't even go there. He wouldn't want to get within 25 yards of this dollar question. What is going on? This is damaging American prestige overseas, and I think, Don, now, with this spurt in the last 4 months of inflation, this is the biggest threat to the economy, not the so-called credit crunch.
Well, you're absolutely right. And to answer your question, have I heard anything that's changed my mind? Yes, I have. I've heard a lot just this week that's made me feel even stronger about commodities and inflation. Have you listened to these speeches that Federal Reserve Board Governor Frederick Mishkin has been making?
Right.
Oh, my God. If this guy is actually making monetary policy, then just crawl into your fallout shelter and pull the door over your head and forget about it, because gold's going to 10,000. This guy is absolutely clueless. He thinks the central bank's only responsibility for controlling inflation is to control inflation expectations. Then he goes on to say, well, how do you control inflation expectations? He says, well, you do that by controlling inflation. Wait, let me get this right. You control inflation expectations by controlling inflation, but it's inflation expectations that cause inflation.
This is dog chasing tail. We're going to come right back. I want to.
Gold's going to 1,500 minimum, but we may see a shakeout here a little bit, but we're going higher. This is not done.
And oil.
Oil, 150, 125 next. We're going to pull back first. So there's plenty of oil right at the moment.
Well, then that's got to sink the economy, Kevin. We can't. That's just insanity. That's total insanity.
Europe's been living with high oil prices for a long time. We're just getting a taste of it.
You call that living?
All right, Kevin Kerr, we appreciate. Cap gains has never been indexed for inflation. So, as you can see in this chart, beginning in late 2006, there was virtually no CPI. It was 1.4%. 22% is the effective capital gains tax. But as the inflation spurts in the last 4 or 5 months, the CPI has gone to 4.5%, and that inflation tax on capital gains has raised the effective tax rate to 37%. The big stock market downturn is in the last 4 months. And this is what interests me. And, Don, I want to start with you and then get everyone in. Everyone is blaming the market downturn since last, since last September, October.
Right.
They're blaming it on the credit crunch. They're blaming it on subprime mortgages and the housing recession. Okay, maybe so. But this inflation tax on cap gains paints a different picture. It says the problem is the jump up of inflation is an increase in the tax on wealth and stocks, and that depresses valuations. What do you make of this? This is sort of an invisible hand pulling down stocks.
You're absolutely right. I'm sure you've heard the arguments that some of the conservative think tanks in Washington have made that the White House could, by executive order, instruct the IRS to inflation index capital gains, and I think they should do that. It is manifestly unfair, it is pernicious, it is poison for all the reasons you're talking about, and it ought to be fixed. At the same time, remember in the 70s, Larry, that it was all taxes that were not indexed.
Right.
It wasn't until Reagan came in that they figured that out. That was the key to stagflation in the 70s, because as inflation rose, it pushed everybody into higher and higher marginal tax brackets. That's what crushed the economy at the same time as you had inflation. So at least now, the good news, if you can call it that, is at least now it's isolated just to cap gains.
Yeah, and the corporate income tax never got indexed either. But
okay,
the
fair enough. Good point.
Personal
Good
income.
point.
When I analyze inflation itself, there are some encouraging signs. In other words, does anyone believe oil will be up another 57% this year? And look at the owner's equivalent rent portion. Does it make sense to be real overly concerned?
I wouldn't rule it out, man. We got 5% just today.
Yeah. Well,
Well, first of all, I have to say to Don Luskin, who I rarely agree with on anything political or economic, that he has been so dead right on this inflation issue. And it's a real problem. It's going, in his testimony in front of Congress on Tuesday, it was embarrassing. And I'm sure that Don disagrees with Bernanke. He's encroaching on property rights, contractual right issues, when he suggests that we should forgive mortgage payments. It's unbelievable what's going on. Do you know what, Don? You know what would happen to the credit markets, the RMBS market, if that proposal went through? I mean, Citigroup would write down another $30 billion.
Don Luskin,
kiss it goodbye.
Here's my argument. John McCain, who wants to distance himself from President Bush on certain issues, you got to be an agent of change to win this election.
Yep.
I believe McCain should go for a strong dollar, a patriotic dollar, a strong America dollar. I think, Don, that will close down the commodity boom. That'll close down the incipient inflation and all the rest. McCain has an opportunity. The Democrats are sleeping. I don't disagree with Dougie Cass. The White House, the Fed, and the Treasury have totally neglected the dollar. What's your take, Don? You think McCain could do it?
I think the White House and the Treasury don't have anything to do with the dollar. I think it's just the Fed. And so, therefore, what John McCain ought to do is he ought to run on a campaign of not reappointing Ben Bernanke.
Well, the Treasury could conduct dollar diplomacy with the G7. Sometimes you got to make a statement in those markets. Sometimes you got to operate currency open market operations. Not every day.
But wait a second.
Wait a second,
Larry, that's not going to work. That'll just affect the optics of the exchange rate. That won't affect the true underlying purchasing power of the dollar. Fine, make the euro weaker. That's not going to do anything for the dollar.
What I'm